The worst mistake you can make as a Canadian is to take your realtor's advice on how to own your US property. Your realtor is going to say that everybody in the US owns their vacation property or the rental property under an LLC. As a Canadian, you do not want to do that at all. I'm Sal, a CPA in Toronto, and I'm helping Canadian investors with US properties completely avoid double taxation. So what happens is you go to a realtor in the US and they tell you that you should own your property under an LLC, and it's going to help you with avoiding getting sued or any litigation. They are right in that sense, but they're not thinking about the tax side of things. See, the US-Canada tax treaty does avoid most double tax on the US-Canada side, but on the real estate side of things, you do have to pay tax where your real estate is located. So when you pay tax to the IRS on your rental income from your LLC, you want to be able to not pay that tax again in Canada. So when you report that income in Canada, Canada is not going to give you what they call the foreign tax credit. The foreign tax credit is essentially you saying to the CRA that I've paid this tax to a foreign government and I want you to let me take a credit for that and not get double taxed. The problem is the US treats an LLC as a flow-through entity. What that means is your rental income would be reported in your own personal tax return. On the Canadian side, when they let you take foreign tax credits, they ask you to provide evidence of having paid that tax to the other country. And when you show them that you've paid tax under your own personal name, they say that this is for your income and your tax payment. This has nothing to do with your LLC. You could argue with them all you want that this is for that same LLC, but they do not regard it the same. Unfortunately, it is not set out in the US-Canada tax treaty that an LLC should be taxed the same way in both countries. So the CRA will ask you that, okay, you've paid this tax, but that was for your own income. You also have to pay tax on the income for the LLC. It's mind-boggling. It doesn't make any sense, but unfortunately, it is what it is. They will ask you to pay tax on that LLC income all over again. And that is how you end up in double taxation. So what's the solution? The solution is one of these three options. One, you could own the property in your own name. And yes, here there is a risk if somebody sues you, they could come after your personal assets. Number two, you could own it under an LP-GP structure. That is a limited partnership structure which has a limited partner and a general partner. I explain all of that in this video. And number three, own it under a US corporation. This is called a C Corp, and you could open a C Corp either in Wyoming or the state where you actually own that property. These three structures are going to help you avoid double taxation and are going to make sure that when you pay tax to the IRS, you're not going to get double taxed by the CRA for that same income. Now, I'm sure you're going to have questions on this. Put them in the comment section. I am definitely going to be replying to you. And if you like this video, hit the subscribe button. I'm going to be uploading more of these to help you out. See you in the next video.